Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the two bearish scenarios on the daily time frame, where the first one is a zigzag to the downside in a wave ABC, after which we expect continuation to the upside. Wave A is a leading diagonal, a 5-wave structure, wave B a 3-wave zigzag touching the 886, which is a common target for B, taken from the start to the end of A, and then we're looking for a bigger 5-wave structure to the downside in a wave C. Common target for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the start to the end of A to the end of wave B, giving you a target between a 54.6k and a 50.5k. Preferably, wave C is also finishing at least after the 0.382 fib time, taken from the start to the end of A to the end of wave B, comparing wave A with wave C in time. The 382 is sitting on the 8th of June. The other bearish scenario is a WXY, where here we have a regular flat in a wave W, a 3-wave structure, expanding flat in a wave X, ending in the common target area for your wave X, the 886-786, taken from the start to the end of W. Then you're going to be looking for a wave Y to the downside in either a zigzag 535, a flat structure, or a triangle, where a zigzag is most common. The common target area for your wave Y is between the 0.618 and the 1.236 trend-based fib extension, taken from the start to the end of W to the end of wave X, giving you a target between 63.2k and 54.3k. An extension target, which is uncommon, is the 1.618 at 48.9k. Preferably, wave Y is finishing after the 0.382, which is taken from the start to the end of W to the end of wave X, comparing wave W with wave Y, currently sitting on the 4th of June. On the lower time frames, in both of the scenarios, a wave C to the downside as well as a potential zigzag in a wave Y, you want to count a 5-wave impulsive move on the lower time frame. Currently, as these structures are evolving, there is the potential here for a leading diagonal. Now, usually I only really like to talk about diagonals once a wave of 4 is in. However, based on the first two structures here and potentially now the third structure to the downside, I already have to start covering this diagonal because the probabilities at the moment are higher. This wave 1 to the downside is a double zigzag in a WXY, zigzag in a wave W, then a wave X, and another zigzag to the downside in a wave Y. The structure to the upside in wave 2 also counts best as a 3-wave structure, especially this move off the low from 66k to this high over here at 69.6k counts better as an ABC to the upside, giving the opportunity for another WXY over here inside wave 2. And looking at the local structure to the downside, we might have another ABC finished here, working on an X, and then another zigzag to the downside in wave Y, creating another WXY. And with already potentially two WXYs here, there's not many other scenarios that can have two WXYs. Now, in this scenario, we're then looking for wave 3 to the downside, preferably not touching the 1-to-1 trend-based fib extension, taken from the start to the end of 1 to the end of wave 2, as that would reduce the probabilities for a leading diagonal. It's not an invalidation, it's simply probabilities. And we're looking for a zigzag family structure in 4 and a zigzag family structure in the wave 5, as in this leading diagonal, all of the waves are part of the zigzag family. This wave 5 is then finishing either a wave A in a bigger wave Y zigzag as explained, or a wave 1, then looking for a 2 and a bigger 3 if we go for much lower prices, looking for that target area of your wave C. Inside wave 3 of the leading diagonal, we are then looking for once again a wave WXY double zigzag, with inside wave W a finished ABC structure, currently looking for a wave X and then a wave Y towards the downside. If price moves towards the upside and hits the 0.7 Fibonacci taken from the start to the end of your wave W, it will significantly reduce the probabilities for a double zigzag to the downside. So in other words, it will increase probabilities for bullish scenarios. We still have a little bit to go as the 0.7 is at 69.6k. Inside this wave X, we're then looking for a 3-wave corrective structure currently counted as a wave W zigzag X and then a flat structure in a wave Y, where the common target for your wave Y is between the 0.618 and the 1.236 trend-based fib extension taken from the start to the end of W to the end of wave X. And as you can see, that is where we are at the moment. The 1.618 is a less common target, however it's also above the 07, which we preferably do not touch. When we look at resistance, we do have some resistance to the upside. We have the blue box, as you can see here, between 69.3k and 69.7k for some additional resistance if wave Y makes it all the way up there. After wave Y, we are then looking for price to continue to the downside impulsively in another zigzag structure. If the low is in at 56k and that is the end of your corrective structure and you look for continuation to the upside, there's only two scenarios we have to think about. The first one is an impulse, 1, 2, 3, 4, 5, where preferably the low of your wave 4 is in, because if you do take this low, there is not much left before you hit the invalidation of this scenario, which is the high of 1, because a wave 1 and a wave 4 shouldn't overlap in an impulsive structure. So we want to count impulsive moves towards the upside in a wave of 5. Alternatively, if you do move to the downside, we have a potential double 1-2 and a wave 1-2, 1-2. Look for continuation. Common target for your wave 2 is between the 05 and the 786 Fibonacci, which, as you can see, is not touched. We just missed out on hitting that 0.5, and the 382 is less common, 886 is rare. If price, however, does move towards the downside, taking out the low and moving into the price section of this wave 1, a double 1-2 also doesn't have great probabilities because your second wave 1 is a lot longer in price and time compared to your higher degree wave 1 in green. On the lower time frames, therefore, if we are looking for bullish scenarios and this is your low and you want to see continuation to the upside, we have to count a structure impulsively. In this particular scenario, we then have a wave 1 to the upside, counted as a wave 1, 2, 3, 4, 5. Not as ideal on the lower time frames compared to an ABC, but that is pretty much the only way to go because we can't put this wave 1 on the high over here. Reason is that if we do, we then have to think about an expanding diagonal, which by all means is already very rare and never preferred, but your wave 5 is shorter than your wave 3, while your wave 3 is longer than your wave 1, and that is not allowed because in an expanding diagonal, your wave 5 should be longer than your wave 3. So therefore, we have to put wave 1 on the high over here, and then have to count a flat structure here in a 3-wave A, 3-wave B, 5-wave C. However, the 1.618 is a rare target for a wave B in an expanding flat, which does lower the probabilities for this particular scenario. Also, preferably, this is the low of your wave C and your wave 2, because if this would still be a wave 1, 2, 3, 4 over here and 5, then your wave 4 is going to be over 6 times longer than your wave 2, which significantly reduces the probabilities that this move over here is still part of a wave 4. So preferably your wave C or 2 is finished. However, this move to the downside here doesn't look very 5-wavy, it looks more 3-wavy, and if we want to end a wave C, we want a 5-wave structure because a wave 1, 2, 3, 4, 5, wave 1, 3, and 5 should be impulsive structures in either a 1, 2, 3, 4, 5 or a diagonal here in the end for your wave C. If we then zoom into this structure, even into the 5-minute time frame, then what we can see is first of all that we made 2 lows, and this final leg to the downside here looks very much like a 3-wave structure. This also by itself looks like a 3-wave structure. Can we count this somewhat 5-wavy? Well, not really. We could have a potential diagonal in here. Well, that is then your first structure. Then eventually you need a second structure like a wave 3, a wave 4, and then a wave 5. But then your wave 5 is this big 3-wave move over here. It's just not as ideal, right? It's not a nice end to your wave C for an ending wave 5 over here to then end your 2 and continue towards the upside. Now, probabilities will change if you hit the 07 as explained earlier, but at the moment probabilities aren't too great that this move to the downside here is a wave 5 compared to this move to the downside being more of a corrective 3-wave structure. If we then look at the CVD divergences, then at the moment the CVD divergences have played out. We had bullish CVDs here, played out once we took the high, bearish CVDs here also played out, more bearish CVDs over here also played out now that we finally took the low. Of course, the probabilities were already higher to take the low as discussed earlier today as well. We hit the 886, increasing probabilities to sooner or later take the double bottom, which happened as well. And on the lower time frames, what we could see, which was quite nice as well, is price moving to the upside here. But as it moved towards the upside, we started to create bearish CVD divergences here, lower high on price, higher high on yellow, and also more locally in the move down here, lower high on price, higher high on yellow, bearish CVD divergences, increasing the probabilities to move down. And once again here, lower high on price, higher high on the CVD. And at the moment, price is moving towards the upside. We have to wait for CVD to show us more about what it wants to do, so preferably waiting for a little bit of more information, bit of a range to form. So if we then go to the probabilities of the different scenarios, then currently the highest probability here being number 1, still seeing another low below the 67.2k low over here, the recent wick, and then take it from there. The WXY double zigzag in the diagonal currently has a higher probability, and it opens the door therefore for a bigger wave C and a 1, 2, 3 lower prices, or a wave A, B, C for wave Y. The probabilities for your wave 1 is also supported by the wave 5 to the downside, which on the lower time frames looks more like a 3-wave structure than an impulsive structure in a diagonal or a 5-wave impulsive move. If price, however, can move to the upside and hit the 0.7 Fibonacci taken from this high to the low here at 69.6k, that is when a double zigzag WXY will significantly reduce in probabilities, and then we can look for price to possibly continue towards the upside, which is number 2 here, the bullish scenario with a flat in a wave 2. A, B, C is finished, looking for price to move to the upside. Wave B, however, did hit the 1.618 at the high, reducing the probabilities, and the end of your wave C is also very 3-wavy instead of 5-wavy. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.